Tonight, fears of an overheated East Coast property market appear to be easing, with evidence home prices are continuing to cool. Almost no growth was recorded across the capital cities last month as tighter lending conditions and lack of affordability start to bite. Prices edged just 0.1% higher in August, according to CoreLogic's Home Value Index. Canberra and Hobart were the best performers with a tepid 0.6% growth. Melbourne managed 0.5%, while the hottest market since 2012, Sydney, saw no uplift. Brisbane edged ahead by just 0.2%, while mining capital Darwin was the biggest drag, falling by more than 2%. Despite the slowdown, Melbourne and Hobart posted gains of more than 12% over the past year, and in the past 5 years, a typical Sydney property has surged 75%, or $521,000. Well, Chinese investors have been one of the big drivers of demand, but as we reported last night, a raft of stamp duty hikes on foreign investors has seen a big pullback in sales. The Chinese government cracking down on money leaving the country, and investor lending in Australia has also curbed demand. But that's likely to be short-lived as institutions find innovative ways to help the money flow and deeds change hands. Shanghai-based Juwai.com is China's answer to realestate.com, and I caught up with CEO Carrie Law on a visit to Sydney. Carrie Law, Australia's housing market is continuing to cool with almost no growth recorded across the capital cities last month. Is this going to make Australian property more or less attractive to Chinese investors?
Well, I would say if you refer to the double hit that Australians in New South Wales as well as Victoria in terms of imposing more tax to foreign buyers, it's been starting to cool down a little bit right at July, right in July this year. And after that, money control in China is kind of hit another round. So we see that there is a slight drop in the Australian market in terms of search and inquiries, but it is not a significant one. In reviewing that, what we see is actually Australia by far in China people's eye, especially in online search, is always number 2, behind US, but above UK.
So do you think the changes in the rules or the charges from the Queensland, New South Wales and Victorian governments had a direct effect on house prices?
I would say for the time being, yes, because we see strong demand in the market in July, May, before the foreigners tax imposed, and a lot of developers and agents has been, very aggressively, launching new projects before the tax imposition. So maybe you can also look into the other way. It's like a lot of consumption power has been consumed before July. So that would be another view to our perspectives to understand the market.
Australian marketers have reported that Chinese off-the-plan sales has cooled significantly in the past 12 months. Do you think it's Australian regulations or Chinese regulations that have affected that?
Yes, there is some kinds of money control. We heard of cases like people cannot find mortgage, not easy, or they have to pay all the way cash to get the apartment, or they just let go 10% of the down payment. Having said that, we see there are 2 other trends up and coming. One is we saw a lot of financial institutes. They've been very innovative to come up with products that helps, and others developers, they actually see this as an opportunity because they have been connected to a lot of banks already. So financially, they're more prepared to come up with special offer or special arrangements tied with mortgage as to help the buyers to secure their financing.
It's getting increasingly difficult to get money out of China to invest in countries like Australia. But how effective do you think those controls are?
There are news in Asia world a few days ago. You can still enter into a money exchange store for remitting up to 10,000 RMB to Hong Kong without checking your ID, and you can do it multiple times, so on and so forth. And these are actually legitimate channels for remitting money that way. And so when we are saying there are control, so effectiveness is another way to really understand whether the control could stop people buying into overseas or doing other kinds of investment.
A lot of Chinese buyers over the past couple of years have signed up to off-the-plan deals. Do you think that there's going to be significant problems in them reaching settlement because of the changes that we've seen and the problems that they're now getting in accessing funding here in Australia?
Well, actually, if you ask me, because we have a call center in China, and a lot of calls recently is asking, if there are any good mortgage, package, or are there any financing tools that could help them to remit money overseas. So I see a lot of buyers, they're actually more aggressively looking for solutions instead of slowing down their decisions. And I think the tourist phenomenon will only be parade for just a little while, because Chinese people, they are still very interested in buying overseas. But having said that, 2016 is really a climax after several years consecutive growth.
Carrie Law, thank you so much for joining the program.
Thank you.